KV Brahmaji Rao, Executive Director, joins me right now. Thank you so much for joining us, sir. The numbers are there. Some of this was anticipated, some of it not. Congratulations first on the great treasury operations, I would say, because you've been able to come out with these outstanding profit after tax numbers which no one expected. What was the strategy, if you could outline, for this particular quarter, and how much could you achieve?
Yeah, thank you very much. I will tell about certain initiatives what we have taken and strategies we followed to achieve this, make a turnaround. See, one thing is we targeted resolution of NPAs. We followed the war room concept, following up with all NPAs, may it be corporate NPAs or small advances. First thing. Second thing is real-time basis. We got the information about the recoveries, and apart from making real-time slippages also to the system.
So what do you mean by the war room concept? If you could just elaborate, what does that mean in operational terms?
See, we made a huge battalion of executives for follow up the recoveries in head office, under 2 general managers, 3 deputy general managers, and a good number of AGMs followed with zonal offices, circle offices, and the branches, and all big accounts we followed up continuously in touch with from head office.
Okay.
So that has given the result that what we have projected in the last quarter, we projected minimum 5,000 crores cash recoveries and upgradations. So we achieved more than 6,000 crores. Right. That is one thing. Second thing is we have reduced the restructured book from 20,124 crores to 18,900 crores. Huge provisions released. Third is that business strategy also, we want to grow resources wise low cost deposits. So because we are having that huge network across the country, particularly 60% of our branches in semi-urban and rural branches, our savings bank account grown by 14.4%. Okay. We have reached 1,71,000 crores in savings bank account by reducing the cost of deposits from 5.85% to 5.46%. Okay. This has given the very good results. Apart from that, because of containing the NPAs compared to last 2 quarters, the slippage is only 9,227 crores compared to 27,000 crores last quarter and 13,500 crores before last quarter. Coupled with huge recoveries and total deductions 8,400 crores, our provisions reduced considerably from 8,500 crores to last quarter net provisions to 2,968 crores this quarter.
So one would imagine that with this kind of a war room approach, as you were pointing out, that one would have imagined that the new slippages, the fresh slippages number would have been much lower, because whatever we were anticipating, the markets were anticipating, the number would have been anywhere between 5,000 to 6,000 crores. What happened? Why were this fresh slippages? Why did that?
So fair enough. Your guess is fair enough. We also guess like that. See, war room concept is recovery. For recoveries, definitely it is recoveries happened good. This slippages, of course, as you rightly told, unexpected. So what happened, since we are recognizing the NPAs through the system, real-time basis, any account slipped to NPA and quickly upgraded also, it will show as NPA, number 1. Okay. Number 2, about 3,200 crores small loans slipped to NPA through the system recognition. This is a good thing happened, because we can adjust these NPAs, resolve these NPAs quickly in the next quarter. These slippages are typically supported by the collaterals and securities.
Okay. So,
and out of this 9,227 crores, I want to give this split of this. Out of this, the fresh slippages only 7,533 crores.
Right.
And about 1,700 crores slipped from the existing NPAs.
Okay.
So and as I told, out of the 7,533 crores also, 3,200 crores is small accounts.
All right. What do you mean by small accounts? Are they retail or are they do they also include wholesale?
Retail, agriculture and MSME.
Okay.
Yeah, wholesale, no, not wholesale. Retail, agriculture and MSME, less than 5 crores accounts. But these accounts are running accounts and typically secured by the collaterals also.
Okay. When we saw other banks, they seem to be betting on going to retail more. I mean, if you look at the revenue breakup of other banks and the mix itself, they seem to be doing retail because they think it's safer, it's backed by CIBIL, you have a better credit record, they're not going to invest in big projects, so you don't get tied up with that kind of a loan. I looked at the revenue breakup of Punjab National Bank, exact reverse has happened. Why did that happen?
No, actually, this used to be what you talked, this used to be in the past.
Okay.
For the last 1.5 to 2 years, what strategy we have followed, not only retail loans, our thrust is for the small ticket advances.
Okay.
So depending upon the branch location, for example, if it is rural branch, agriculture, if it is semi-urban and urban places, retail and MSME advances. Because of that, for the last 1.5 to 2 years, our growth rate in retail increased to 20%, particularly housing 24%. And MSME is growing at 9%. Agriculture is growing at 10%.
But sir, if I just look at the breakup you've given in terms of business segments, I'm sorry I'm interrupting you. If I look at the breakup you've given in business segments, and if you could just explain that to us, I'm just looking at corporate/wholesale banking. That was about 3,272 approximately crore. That has become 6,535 crore right now, whereas retail banking, which was 6,540 crore approximately, has come down to 3,463. It appears that you're shrinking in retail in terms of revenue and increasing in corporate and wholesale. If you could just break that up.
No, that's right. Let me clarify that very clearly. So our corporate book used to be the bigger compared to retail and small accounts. Now with this growth in MSME retail, our small loans book increased to 59%. Only 41% is only corporate book as on date.
So is some of it being clubbed under corporate/wholesale banking? Because the data that you've put out seems to suggest that your corporate/wholesale banking has almost doubled. I'm just looking at your press release, sir.
No, that's why you please make a note of this. The facts I am giving now. See, the retail book is about 58,000 crores now. MSME book is 85,000 crores. And agriculture is about 64,000 crores.
Okay.
So all these small ticket advances together comprise of 2,07,000 crores. 59% of the total advances book.
Okay. All right. That's interesting. Just give us a sense as to the treasury operations, because that seems to have really boosted your profits, the net profit. What was that? How was that planned, or is it just a one-off? Is this something that you're doing actively?
Yeah, I told there are three aspects in this. One is we have consciously taken a call not to grow in high-risk advances. That's why our growth rate contained to 2.8%. But within that, we have grown 20% in retail, about 9% in MSME, 10% in agriculture. This has given a boost for us and containing the distribution of the risk, containing the slippages. Number one. Number two, we have got huge recoveries in write-off accounts. 727 crores we have recovered in write-off accounts, which straight away gone to the profits. And our trading book also has given a profit of 601 crores. So these steps coupled with containing the NPAs, through that we contain the provisions, which was 8,500 crores last quarter. This quarter is only 2,968 crores. So all the strategies has given the results, so we could make a turnaround and post 306 crores profit.
All right, if I look at the gross NPA, sir, again the market, the kind of analysts we talked to, they expected you to maintain it around that 12.9% level, gross NPA has gone up. Now, but I know you declared a lot of, you cleaned up your books, you are cleaning up your books, you are recognizing NPAs much quickly. But generally one expects as someone, if there's an investor, that this bank would, once it's cleaned up its books, would actually show a declining trend in gross NPAs. That has not happened on a quarterly basis, on a sequential basis.
Yeah, fair enough. See, we have given a very clear guidance last quarter when we declared the March results that June will be by and large, our slippages will be by and large at par with the reductions. From September onwards, definitely our slippages will be contained further and it will be much, much lower than the recoveries. Now, to confirm that, against 9,227 crores slippages, our reductions is 8,400 crores. Right. We are near to that, whatever projections we made. So, the only thing is, as I mentioned, the denominator has not grown. The credit growth is only 2.8%. It's a conscious call, of course.
Yeah.
So, advances came down by 20,000 crores compared to March. That's why percentage-wise it appears more. But if you add our NPAs and restructured book together, it is less than that of March quarter. That means overall, our stress assessed book is not increasing within the limits, but percentage wise, of course, as you told, since the credit growth was not there, denominator has not grown. But going forward, as you rightly told, we have already recognized all the accounts through the system and cleaned up the balance sheet. So things will be better. As we have given guidance last quarter, and our March 17 NPAs will be definitely less than that of March 16 as far the volume is concerned.
Sir, at the end of the day, the business of a bank is to give loans, right? I mean, that's why in your balance sheet it's an asset. In mine, it's a liability. Of course, there's fee income that you also have.
Right.
What is the strategy to expand that? Because right now I understand that you're being cautious. You'd rather not give a loan that turns into an NPA. How do you now look forward to actually expanding the loan book, expanding your business?
Yeah. So, apart from addressing the resolve the NPA issues, the main thrust is for growth of credit.
Right.
So, generally, the first quarter of the year is generally a slack season. But YoY 2.8% we have grown. Now, we are expecting that we are growing in retail and MSME, as I told, and growing in some sectors which are come out of the stress also, for example, roads, sugar. These sectors already come out of the stress and we are getting some proposals, and industry is doing well now and we will grow there. And we are projecting.
Okay, you're saying industry is doing well.
Months, not very huge loan book growth, maybe 10 to 12% growth we are expecting in credit. All sectors together. But main thrust would be retail, MSME and agriculture. Yeah.
All right. There is also in your notes, in your press release, you've also said that there has been a revaluation of your assets, and you've now got revaluation surplus amounting to about 964 crore. Under the new system, we understand that this goes into the tier 1 capital, right?
Exactly. And it is increased by about 30 bips.
Okay.
Because of revaluation, our CRAR has grown by 30 bips.
All right. And what impact does that have on your ability to give loans right now? I know you're going cautiously.
Yeah. With that, So now our CRAR is increased to 11.58%. Tier 1 is grown to 8.62%. And of course, with the infusion of the capital by government, another 66 bips will be grown. So we are, as far capital is concerned, we are in comfort zone as per the 10 to 11% credit growth, and by providing for NPAs and if required. So we already had the board sanctions intact. We'll go for 81 and Tier 2 capital. So with this, capital is concerned, we are in a comfort zone.
Sir, one final question. I know you've given us a lot of time. Q4, a lot of people saw in the
Yeah.
markets as a turning point, in a sense that you had taken the bitter pill. You're now on the recovery path. Q1 is a bit of a mixed recovery. It seems like, when you have influenza, viral fever, your temperature drops and then suddenly comes back to 99.5 on one particular day. It's almost like that. Is this the last blip we will see?
Yeah, it's a nice narration you made. See, exactly the thing what is happening, because see, the efforts what you have put is giving, thrust is given for a resolution of NPAs. It is giving good results. So what I confirm to you, that cash recoveries and upgradations is the highest in the industry among the peer banks. That has given the confidence for us. And by containing the NPAs continuously for the last 2-3 quarters, what is seen, and that will be continued with the efforts to recoveries also. And that's what I told. It's a good things are happening now. As per the growth is happening, a little bit credit growth is seen now, and recoveries are visible. So with this, definitely the outstandings of NPAs are concerned. So by March 17 would be less than that of March 16. And that what is going to happen for Punjab National Bank. With that happens, all the ratios will come back. ROA and NIMS is already now also, despite this stress period, we are in comfort zone.
You've done a good
and things will be better.
All right, sir. Thank you so much for giving time. Pleasure talking to you. Thanks a lot.